Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and today is Wednesday, August 18th. Ugly slide at the end of the day. That was not exactly fun, especially if you had some trades working. We'll go through that price action. Risk disclaimer first. Everything that we're going through here is for information purposes only, not giving out any advice or recommendations. Everything that we're going through here is for education purposes only. If the screen is a little bit blurry, just give it a little bit more time. YouTube takes a long time to render these videos. So yes, ugly slide at the end of the day. I gave back some positive P&L for the day. I've been very adamant about taking targets in some things, and especially like if I'm doing anything with options, some of them I've just been killing, even though I've got a trade that's going the right way. And it's a dicey market, and I would say, number one, if you're feeling it right now, take a deep breath, relax, and things that we've been talking about all week and leading up to this week is that this week is a tough week. It's been that way every week, and every month in 2021, it's either the option expiration, the monthly option expiration week, or it's the last week of the month that has just seen this horrific price action that has happened. So it is what it is. So I'm not trying to say anything mean like that, because I'm in it too, and I'm trying to trade. I'm not on vacation, which I kind of wish that I just take off these last couple of weeks of the week every month, but I don't take off that much time. But yes, it's the same thing every month, and soon, because I think more and more people are onto this, it will eventually change. But here it is again, at the end of January, at the end of February. March was a little bit different. March was option that it wasn't the last week of the year, but in April we didn't really see it, but we did see it in May, right? In June, in July, the same exact time frame in July, last month. So it should not be a surprise. So at all, some of this price action, right? So making adjustments, that we've talked about literally every day this week, about lowering your amount of positions, toning down the size of the positions, watching your short-term option risk, right? And even possibly having a hedge on too, which we've talked about that in the trading room too. We talked about an SPX hedge, which looks like it probably worked. But one thing that I want to start to with this in this video too is something that I talked about on Monday. I don't normally I'm really repeating myself, but I don't mention normally something that I've already mentioned. But I thought that this Odd Lots podcast from Bloomberg was exceptional, so I'm mentioning it again. This gentleman, Brent Donnelly, I don't know him, but he really went through what it takes to be a trader full-time, a professional trader. And one of the main things, and it doesn't matter what level you are, I think it's good for anybody to listen to this podcast. It's about 45 minutes. If you don't have the 45 minutes, I'll just tell you a couple highlights here. Is that it's making adjustments, right, and adapting to what the market is, right? I'm paraphrasing what he's saying, but adapting to, I think one of the major points he made was adapting to how the market is changing, right? We've talked about this many times this year, is that this year is different than last year, right? There's a lot of things that have changed, and so being nimble. What I love to do is not really, the atmosphere, or the environment is not perfect for what I like to do. I'm a swing trader, right? I'm doing more like quick trades now than I usually do. So we could talk a little bit about that. I always show my trades in here. And we'll go through some charts as well. But I'm in and out of things so quickly, right? I mean, I got long some. I traded some SE yesterday. This one worked really well, but sometimes I'm getting out of trades a little bit too early too, because I know this is not the environment to like really press winners, right? So what did I do here, right? So I took this position off, right? This worked for me quite nicely. This was a roll of a position that I started yesterday after the name reported earnings, and I rolled it into a further out strike in options, but I was really quick. I was out of this at 11 o'clock, and what I've been doing a lot of times is if I am dipping my toe into some options, right, mostly what you see me saying is, hey, this is a small position, this is a starter position, because it's just not worth it right now to kind of to try to stick your neck out and say, hey, I'm going to take a big position on in something. And then what I've been doing is, as I make the money in the options, I'm just going into a little bit of stock. Sorry, this was. I don't know why I have call on here. It should be a stock, right? So this is a typo on there. Of course, I make typos, but yeah, that's been working for me a little bit easier. Is just to say, hey, if you made some money in the options are going to be much more sensitive. I still want to be in a position, but I really take it down and I stay in stock versus a stop price. It's so hard to use stop prices in options as fast as this market is moving. But even still, this thing didn't close on the highs, but still looks pretty good. So that's the best I could say, guys. In terms of where we're going here, we'll see if this top of value stands. I would expect, it's Wednesday. Sorry, I shouldn't say I would expect, but I wouldn't be surprised if there's more volatility this week. Why? Because that's how it's been happening every month, right? And the other thing is I'm not seeing sentiment completely washed out. I think the put call, one of the things that I do look at, some people, I always seem to get people who get mad at me when I look at the put call ratio on Twitter. Oh, it doesn't work, and it does for me. It shows when the complacency is out of the system. For example, right? Look at where it topped out at. So I really use it to kind of spot reversals for contrarian plays, right? The feeling is that when everybody's buying puts, they're usually doing it when it's too late. And it's a contrarian reversal signal. It doesn't work 100% of the time, but it does work a lot. It worked beautifully right after option expiration in July, right? That was the low of the week, right? And where was the put call ratio? Well, it was almost 0.7, right? So if you want to put SPX in here, right, that helps. I don't know if I might have to normalize this. Whoa, that doesn't look right. So something's funky with that. That's odd. But nevertheless, let me take this off if I can. Oh, I don't think it's going to let me do that. So let's go back. Put call ratio. So again, this is just equity put call ratio. And yeah, so if you could see where this thing spiked last time, that was on 7/16, right? So we had that's delayed, by the way, one day on Bloomberg. So once fear finally rose up and people were buying a lot more puts, that's where we got the reversal. Again, the theory is that people are buying puts at the absolute wrong time, right? Instead of before we have a drop, people are buying puts after the fact, right? It's the saying that I use all the time. It's puts and hedges, they're like insurance, right? So I kind of think of it, I use the analogy with homeowners insurance, right? You don't want to be buying buying homeowner insurance when your house is on fire, right? Number one, or if your house just had a fire, right? The insurance company is going to make you pay more for that because you just had an incident, and it's not going to do much if you've already had a fire, right? The other thing too is, when you do buy puts, when the market is not doing much, you don't necessarily want your house to have a fire to collect on the policy, right? Meaning you just want an insurance policy. People try to make money on their hedges, and really you don't really want to make hedges. You don't really want to make money on your hedges. Now, you could also be buying puts to speculate. That's different. But in any event, let's get away from that conversation. But But we'll see if this begins to spike up. But bottom line is we're not seeing like heightened levels of fear right now in the market in terms of this is just one gauge. And then the other thing that we keep talking about too is like this also, besides the seasonality, right, the time of the month that this is happening, right, we're also seeing this big breakdown in breadth. Every day we are seeing just breadth deteriorate. So I was on Bloomberg yesterday. Listen, I am not a bear. I try not to be permit anything, right? But if you go to my video yesterday, that I was on Bloomberg yesterday just for their options insight segment, and I never talk about putting on a put trade, and I talked about putting on an XRT trade, which by the way hasn't started to work yet because we had some bounce back and some of those areas that were down yesterday. But so I always give like a bullish idea on Bloomberg, so it kind of just tells you, hey, if I'm saying so that you need some protection, or to be making adjustments for the end of the month, I'm not messing around, right? So that's that. Yeah. So if you're frustrated by the price action, I would take a deep breath and make sure that you are making those adjustments and honoring your stops. I said this with Apple today. I was long a residual position of Apple coming into today because it's worked so well, and I said Apple looked weak like in the beginning of the day before this big move. Towards the end of the day, it wasn't acting right all day long. And I said, hey, if this doesn't hold 148, I'm out of this. You have to draw the line in the sand. And here's where I took this position off. And again, this was still a very profitable trade for me. Yeah, this was at 3 o'clock today. So again, I probably waited a little bit too long, but so 3 o'clock was. We'll just match this up with the time, was like right in here, right before that big slide lower. So I missed the slide lower, and every trade I put on, I have stop prices, and I mentioned in what was it? I don't think it was yesterday's video. I think it was the day before that. I had to sell some things earlier in the week that broke and took my stop off, but. It's not a big deal, right? One of the sayings that I was using earlier in the room was, I have no problem having a bad day here and there. What I don't want to have is a bad week or a bad month. And if you honor your stops, a lot of the times, you're going to have that bad day, but I could recover. And I'm very confident in my trading system and my abilities as a trader, as long as I'm following my process, right? If I ignore my process and act stubborn, then I've got a problem on my hands. But I'm very conditioned to and I hope these videos kind of teach some younger traders, because that's really what I'm trying to do, is to say, hey, be disciplined, understand that we can't control this market, and if you be disciplined, it's not to say that you're not going to have a bad day or two, but you could live to fight another day and deploy more capital and be more strategic on the long side when the environment is right. And one of the things that we do know about this environment is it hasn't looked right for a while, right? We've been seeing just this. I hate using this word, but it's this deterioration in this breadth, right? Even today, like for example, it was looking stronger this morning, and again, I try to be optimistic, but you could see the deterioration over the day. Most of the breadth indicators that we use, this was positive for the day. So, but we landed right back where we were. So, and here's for the day, you had 1,700 names in the Nasdaq which were declining, and in the morning it was flipped the other way, right? It was actually much more names that were advancing. The S&P. Really ugly. That, even though the Nasdaq was flipped around, the S&P was had that negative tone to it in the middle of the day. So here's where we were. This was at 9:30, but it was more positive. Like I said, as we were around like 1 o'clock today. The Fed minutes, right? So today was the one, it was not a Fed day, but they released the notes from 3 weeks ago. What spooked people a little bit too was just that some of them are thinking about starting the tapering in this year. To me, this is something that has to happen. Like, not the tapering has to happen this year, but the market has to get acclimated to the fact that they're going to eventually have to taper, right? And I've said before that as the market gets adjusted to the fact that this is eventually going to happen, and when they actually make the announcement, it's probably going to sting a little bit. But I think that the market's going to be okay after that. Why do I think that? Is because the market doesn't like uncertainty, right? I think everybody knows at this point that they can't have this expanding of the balance sheet forever. Eventually, there's going to be tapering, right? Unless you have have extreme views about that, which is fine if you do, but the market has to get up to speed with that and get acquainted with, hey, let's start tapering. Let's have a schedule for tapering. And if the Fed, and I hope they do, I joke around a lot about this on Twitter, but if they do come out and they have a definitive time frame, like I said, there might be a knee-jerk reaction, but once you take that uncertainty out of the equation, rather than the will we won't will we, the back and forth with the Fed governors, the market might actually like it because you're taking the uncertainty out of what everybody guessing and having to make adjustments, right? About when is this going to happen? Oh, do I need to get out of, do I need to get more into cash because they're going to actually do this, right? Once we get to the place where they've actually defined it, I think it will be better. That's just my opinion. All right. A couple other things. This team, unfortunately, sometimes this is how it works, guys. Team looked good for the whole session. I'm looking for a breakout above 340. I left the trade on. I put my stop price at 335. So I'm giving this a chance until tomorrow. There was this big MOC. So big sell imbalance. So I may be a little bit foolish here, with holding a trade as the buy signal fades here, but I'm okay with the risk right now, and I do have a defined stop. So 338 is what I want to. I've been rounding up, so 340 is what I want to see. But that's the thing too. Like, if you can kind of get through this market and have some patience, I think once we get through this end of the month seasonality, come September, even though September is not generally a very strong month, I think there's a lot of names that had some really good earnings, and you're going to find some good setups, right? But again, this seems to, and I don't know, you guys can of course respond back to me on these YouTube videos, or you can email me, but I make the majority of my money in the first half of the month, right? And that's been happening now for months. So the more that I could play a little bit of defense, the more I can kind of hold on to those gains. And remember with this market too, I'm just kind of spitting out a couple sayings that you hear a lot of times people say, is that it's not that hard to make money in the market. What is hard is to hold on to those gains and not give them back, right? That comes with experience, having a defined plan, sticking to it, a process, and those adjustments that we talked about. All right, is there anything else? So kind of a boring video because I'm not going over a lot of charts here. When we have volatility like this, I tend to focus more on the index charts. But we'll see how this works for tomorrow. 4396 is the top of value. Notice that we're just breaching the 20-day moving average. So again, I wouldn't be surprised if we get down here. I also wouldn't be surprised if we hold in here. There was some downside things that were taken out. There was this VPOC that was taken out. We did break through. I mentioned this on Twitter. I said watch 4419. We broke through that like a hot knife through butter. That's why also I put out these levels to kind of say, hey, watch out if we break these levels. Right? There is another VPOC down here. right? So again, like I said, I don't have like a really strong feeling that we're going to hold in here. I do think that the selling pressure at the end of the day was pretty extreme and a pretty big MOC sell. But I wouldn't be surprised if we bounce a little bit tomorrow too, right? And what you can do too, just to kind of plan ahead a little bit. Let's say because this extreme like MOC at the end of the day, let's say that we do bounce again in the beginning of tomorrow. What you could do is and if you're up in the day, you could put on a couple puts, right? To try to lock in those gains in case we get another late day slide. Because again, with this market right now and where we are, nothing really would surprise me. All right, because that's how it's been. Qs, notice this is the first also break inside value, um, and an ugly close. IWM gave back those early gains. It was leading. So a couple other things that I thought are interesting. This Chinese internet ETF, right? Just to change the subject here. If you look at if you look at the weekly chart of the Chinese internet ETF, it's at the point where it could be in bounce territory. We'll see where this finishes at the end of the week, but I would like to see this thing get above 47, 49. You don't see me doing a lot of dip buying like this, but if we get above 47, 49, you might see me buy a little bit of Chinese equities for like something long term. Again, probably like a December option, right? Where I'm just going to be risking the premium, and if I lose the premium, so be it. But I think at this point, sure, it's gotten washed out, and only if I have a level to trade against. So I want to see this come back to 47, 49. If it doesn't, and if it doesn't hold, then I won't try the trade. But I would like to see this get back above 47, 49, and I will put on a bounce trade for the Chinese internet ETF. Again, so purely a technical trade that I'm looking at. All right, what else? A couple other things. Let me just go over, see if there's any other. I feel like I'm not giving enough examples here. We talked about that. Palantir was interesting today. So again, gave opportunities for some trades. I don't know what Palantir, the level that I mentioned was this 25. Look at this. How funny is that? Try to get above value. There's a VPOC up here that this thing could get to. But if you're interested in Palantir for a scalp trade for tomorrow, I would make sure it stays above that 25 level. All right, that is the level that I quoted on Twitter, saying, "Hey, this thing has to get outside of value for the week, and if so, then you could target 26.58 in the short term, for short-term scalp." We'll leave it there, guys. Have a great night, and again, if you had a tough day today, it is what it is, and get over it, and there'll be some good things I think ahead once we get through this month.